A watershed moment for the crypto industry happening today, really happened yesterday. 11 Bitcoin ETFs, though, set to begin trading in just about 2 hours from now. It was a very long road to regulatory approval, particularly for our next guest, whose Grayscale Bitcoin Trust is among those ETFs approved, happened in large part because of a lawsuit that the company brought. And joining us right now, first on CNBC, is Grayscale CEO Michael Sonnenschein. Good morning to you.
Good morning.
You were getting a shout out from Brian Armstrong. I don't know if you saw a little bit earlier, because a lot of this would not have happened had you not pursued this in the way you did.
Yeah.
I wanted to ask you just broadly, did you guys celebrate last night? What's going on here?
You know, the last couple of hours have just been a complete blur. When we got that phone call yesterday that our 19B4 had been approved and our S3 had been deemed effective, it was almost an out-of-body experience.
You knew it was coming.
You know, I think we knew it was coming. We were optimistic. We were steadfast in our conviction around this. But this is really the culmination of 10 years of work. Investor support, the Grayscale team, everybody's been working tirelessly towards this outcome.
Okay, so what does this fundamentally mean, though, for Grayscale?
It means it's the beginning of having GBTC trade on the New York Stock Exchange, right? We've now have a whole family of investment products that have been following a very prescribed life cycle from private placement now all the way to ETF. GBTC is the first of those products to do that. And now the rest of the Grayscale family of products can start to move along that continuum as well.
Question, though. You were a monopoly of sorts prior to this, which was if you wanted access to Bitcoin, not owning it directly, but in the form of a fund, if you will.
Yep.
You were the only way to do it. Now you're going to have to compete against 10 plus others, many of which are going to try to do it at a much lower fee schedule than you do.
Yep.
What is that going to do?
Well, we've been prepared for a world in which there are multiple spot products. GBTC has certainly been the product that has forged the path for all of these other issuers to come to market. Our court victory, our guts, our operations, our disclosures, our work with the SEC. Investors should have choice, but GBTC is coming to market in a very differentiated way. It is going to be, as of this morning, the second largest spot commodity ETF in the world. It has $28 billion of assets under management. And other issuers may try and differentiate on fees. For GBTC, it's about size, liquidity, and track record.
So one of the things, actually, I don't know if you saw, Anthony Pompliano was on the broadcast earlier in the 6 o'clock hour, and he made an interesting point, given that your fees are going to be materially higher than a BlackRock or just about almost everybody else.
Yeah.
He said, look, these guys may not need to go after new money. They just need to keep the money they've got and maybe even build upon that with other ETFs and other funds. Is that the strategy that you're pursuing, or is there something else going on?
Well, I think we're certainly focused on building the ecosystem around GBTC. So, for example, GBTC trading on the OTC market since 2015 never had listed options, right? Now that it trades on NYSE, you can now see the development of an options market around GBTC. So you really can see how investors can continue to compile their Bitcoin exposure around a market-leading product like this.
What's the distinction between me going off and buying the BlackRock fund versus buying yours?
It's about the asset manager that's behind it. We're a crypto specialist. We've weathered all different types of speed bumps and advancements within the crypto ecosystem. For a lot of these asset managers and issuers, this is the first time they're going to be dealing with the complexities that go into running these types of products.
But you don't think BlackRock's up to the challenge?
You know, I'm not going to speculate on how well other asset managers will or won't navigate that. But what I can say is that over these last 10 years, we have learned countless times through countless cycles that this is not a straightforward process.
Why are your fees higher, 1.5% versus 0.2% for a lot of these?
I think that you know, Becky, we've talked about fees. We promised investors we'd lower fees. We did. We've reduced by 25%. You have countless examples across the ETF space where you have category leaders that are not the lowest cost option.
No, but Michael, when you look at the screen, we just put up the fees for everybody across the board. You are significantly multiples higher than everybody else out there. Why?
Yes, because GBTC has differentiated characteristics. There are no assets in these other products. They're starting from zero. And GBTC, again, has that market-leading liquidity. It traded over $650 million notionally yesterday alone.
I know, but BlackRock is like the biggest of the big. If you're just looking about liquidity and where you have things backed up, like what, I'm really curious. Make the case for me why I should pay 1.5% versus 0 to 0.2%.
Well, we certainly did a lot of research around this. The market in the U.S. is just starting today. If you look at other geographies around the world, you have seen products that have fees that carry anywhere from 125 basis points to even 175 basis points, whether that's in Europe, Canada, elsewhere. So there are market precedents for crypto products as well.